Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the 1 hour time frame where we are looking for a 5-wave impulsive structure to the upside. The common target for your wave 4, which is what we are looking for at the moment, is between the 0.236 and the 0.5 Fibonacci, taken from the end of wave 2 to the end of your wave 3, giving you a target between 72k and 70.1k. The invalidation for a wave 4 is the 0.618 at 69.3k. After a wave 4, we are looking for a 5-wave impulsive structure to the upside in a wave 5 to then finish this 1, 2, 3, 4, 5 and look for a bigger retracement. The common target for your wave 5 is between the 1.236 and the 0.618 on my chart, 74.1k to 76.4k. The 1.236 is a Fibonacci taken from the end of wave 3 to the current low inside this wave 4, and the 0.618 is a trend-based fib extension taken from the start of wave 1 to the end of your wave 3 to the current low of your wave 4. The bearish scenario is a finished 5-wave impulsive structure to the upside, and now we are looking for a leading diagonal followed by a 3-wave corrective structure and then another move to the downside to take the low of this leading diagonal wave 5. The probabilities for this scenario, however, are lower for multiple reasons. First of all, this impulsive structure to the upside has a shorter wave 4 compared to wave 2, which is less common. This wave 4 also did not retrace to the common target for a wave 4, which is between the 0.236 and the 0.5, as you can see. Finally, we have the most amount of volume in this local uptrend here in the high. If we check the volume, then on the 1 hour chart, you can see that we have a very small volume spike that is higher in 5 compared to wave 3. However, it is more clear on a 2 hour and higher time frames. 2 hour time frame, higher volume, 3 hour time frame, also higher volume, 4 hour time frame, exactly the same. So you can see that the volume increased here in the final move to the upside, which is more common for a wave 3 compared to a wave 5. Also, if we want to give the highest probabilities to a diagonal, we preferably wait for at least a wave 4 to be in, if not a wave 5. And at the moment, we only have a potential finished wave 2, after then a 3-wave structure down in 1, in 2, and then we look for a wave 3, wave 4, and still a wave 5. So it will still take quite a bit of time before we can really give the highest probabilities to this 1 hour bearish scenario. Looking at the CVD divergences, you can see we have both bullish as well as more locally a bearish CVD divergence. As these are countering one another, it generally is recommended to wait for one to play out or for a CVD divergence to be invalidated. Of course, on the 1 hour time frame, we are in a bullish trend, so generally the bullish CVD divergences are more interesting to use. We also have some news today, Thursday, October 31st at 2:30 p.m. Central European Time. This might increase the volatility around this hour, so make sure you trade safe. I will make sure that I am live at around 2:30 p.m. Central European Time to observe the chart together with you. If we then look at the probabilities of the different scenarios, then on the 1 hour time frame, the probabilities are highest for the bullish scenario, where we are still looking for a wave 5 to the upside, compared to the bearish scenario, where we would need to see a leading diagonal, but we want at least a wave 4 to be in, if not a wave 5, to give this the higher probability. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.